sir. Hello.
Hello, good evening. Am I audible?
Yes, sir.
Yeah, okay. So, Alexander and Steve, how are you?
Fine, sir.
All right. So, so we were discussing about the single entry system, and I think at the end of the last session, we were talking about the capital expenditure and the revenue expenditure. And just a minute. I hope everything that we have discussed in the last class is clear to both of you. So, before proceeding further, we will first revise everything, then we will move to the next topic. So yeah, in the last session we talked about the meaning of the capital and the revenue expenditure, and we have done a small question based on this concept as well. So while discussing capital expenditure, I have told you that capital expenditure refers to those kind of expenditure that gives benefits to an entity for a longer period of time, generally more than one accounting period. And these expenditures uh, are incurred by an enterprise normally on purchase of fixed asset, right? Then we have taken few examples to make it more clear. Then I have also told you how to treat the capital expenditure. So capital expenditure is generally debited to the fixed asset account. So on any asset, if you have incurred capital expenditure on any asset, that expenditure will be debited to that particular asset. Let's suppose if you have spent capital expenditure on machinery, then machinery account will be debited by the amount that you have spent on that machine. And then we have talked about the revenue expenditure, few examples, and the treatment of capital revenue expenditure. Then we have discussed this particular question. I hope this question is clear to all of you. Now, in today's session, we will be talking about the preparation of the debtors and the creditors account, because yeah, so yes, so we need to basically until now we were discussing about determination of profit or loss of an entity who is maintaining their accounts on the basis of a single entry system. So I have told you that there are two methods by which profit and loss of such kind of entity can be determined. One is called the net worth method, wherein we have to prepare the statement of affairs and at the beginning and at the end of the year, and on the basis of that we prepare the profit and loss statement, and accordingly we find out the profit or loss of that entity who is maintaining the account on the basis of single entry system. Now we have the other method to determine the profit or loss, wherein which is called conversion method, and wherein we prepare the trading and profit and loss account, we prepare balance sheet so as to determine the value of the asset and liability of that entity and profit or loss of that particular entity. But before starting the conversion method, before actually doing questions, before actually determining the profit or loss of the entity based on conversion method, I would like to first tell you about the preparation of the debtors and the creditors account. So we will be doing few questions based wherein we need to find out the credits, total value of the sales and the total value of the purchases. So in order to find out the total value of sales and purchases, we need to prepare the debtors and the creditors account. So just a minute. Okay, so we will start our session from this question. But in order to solve this question, first of all, we will be required to understand how debtors account is prepared. See, let's just once read this entire question, then you will understand why do we actually require to prepare the debtors account. See, herein it is mentioned that debtors in the beginning is 30,000. Then we have sold goods on credit 75,000. cash is received from the debtor 35,000. Then we have some sales return, that is return inward 5,000. Then bills receivable is drawn 25,000. We need to find out the balance of debtor. That means we need to find out the closing balance of the debtor at the end of the year, considering that there are bad debts of rupees 2,000. So in order to determine the value of debtors at the end of the year, we will have to prepare the debtors account. So for that purpose, we will first talk about the preparation of the debtors account. Then we will talk about the preparation of the creditors account. Debtors account is also helpful if we want to calculate the total value of the sales made by the entity. So for that purpose also, we will be required to prepare the debtors account. Okay, so let's start with the preparation of the debtors account. Just a minute, give me a moment. Yes. Okay, so you will have to note it down. So I'll be talking about the preparation of the debtors account. Just a minute. I think there is some problem with my tab. Let me just a minute. Yes. So all of you is required to note it down. So first of all, you will be preparing the debtors account. So debtors account. Debtor account is also known as total sundry debtors account. This is also known as total sundry debtors account. Both have the same meaning. So in order to prepare the debtors account, we will be making some columns. First of all, particulars, amount, then particular, and amount. Okay. So this is how debtors account will be prepared. So on this, the left side of this account is basically, as you all know, this is debit side, and this is the credit side of the account, right? So on the debit side, we will start with the opening balance of the debtor. So we will write here on the debit side, we will write opening balance of the debtor. So this is how we will be writing it: to opening balance of the debtor. So opening BD. This indicate the opening balance of the debtors. Okay, now just keep this in mind. On the debtors, on the debit side of the account, just a minute. So in the debtors account, on the debit side, all those items are recorded which increases the value of the debtor, right? Which increases debtors, all are recorded on the debit side, and all those items or transactions which leads to reduction in the value of the debtors are recorded, which leads to decrease in debtors are recorded on the credit side of the account. Is that clear, Alexander and Steve? All those transactions that leads to the increase in the value of the debtors are recorded on the debit side, and all those transactions or items which leads to the reduction in the value of the debtors will be recorded on the credit side of the debtors account. That means on the credit side. Is that clear to all of you?
Yes, sir.
Okay. All right. So so on the, so did anybody have any idea what kind of transaction leads to the increase in the value of the debtor? What leads to increase in the value of the debtor when debtors increases? Okay, do you have any idea what are debtors? What do you mean by debtors? Who are debtors? Alexander, Steve, anyone of you, please? Who are debtors?
So they owe money to the organization.
They owe money to the organization, right? So basically, in general, we say that to whomever we have sold goods on credit is our debtor, correct? So basically, our debtors of the entity increases, debtors of the business organization increases in a situation wherein business is selling goods to some person or entity on credit basis. So if there is credit sale, it will lead to the increase in the value of the debtor. So it will be recorded on the debit side of the sundry debtors account. So on the debit side, we will be writing to credit sales. Why it is recorded on the debit side? Because it will lead to the increase in the value of the debtors. All right. And now, what leads to the decrease in the value of debtor? So debtor increases when debtor makes payment. So whenever you receive payment from debtors, the value of the debtor will decline. So whenever cash is paid by debtors, it will be recorded on the credit side, and the overall value of the debtor will basically reduce. Okay. Then debtors also reduces when customer return the goods. So in case of if there are any sales return, it will be recorded on sales return. This will be recorded on the credit side of the debtors account. And overall debtors also decreases when we allow discount to our customers. Discount allowed to customer. If discount is allowed to customer, this will also lead to decrease in the value of the debtors. All right. Okay. Debtors also reduces when customer makes payment through check. That means when he makes payment through check, in that case also overall debtors will reduce. Tell me, Alexander, is this clear to you?
Yes, sir.
Okay. And also debtors, there will be a reduction in the value of the debtors. Sometimes what happens, no, debtors issues the bills receivable, right? Debtors, let's suppose if I have sold goods to Alexander for rupees 50,000. So Alexander is my debtor, but Alexander is issuing me a promissory note, which is a bills receivable for me. So when he issues a bills receivable, that means when he basically draws a bill on me for me, it will be considered that there will be a reduction in the value of the debtors. So if there are any bills receivable, by bills receivable, it will be recorded on the credit side of the debtors account because it leads to the reduction in the value of the overall debtors. So all these items are recorded on the credit side. And let's suppose if check has been given by the customer, but later on it got dishonored. So that means if bill got if check got dishonored, this will again increases the overall debtors, right? So if any check is dishonored, it will be recorded on the debit side to bank. This is in a situation when check got dishonored. Check dishonored, then we will be recording this transaction on the debit side of the sundry debtors account. Then if sometimes bills receivable is drawn, but on the maturity date bills receivable is also got dishonored, customer denied to make the payment against the bills receivable, this is called bills receivable dishonored. So this also increases your overall debtors. Bill receivable dishonored, it will be recorded on the debit side. So you can understand it this way also, that all these items to opening balance, credit sales, if check got dishonored and bills receivable dishonored, all these items will be recorded on the debit side. And all those transactions which involve receipt of cash, sales return, discount allowed, bank, bills receivable, all these items will be recorded on the credit side of the debtors account. And also we will be writing by bad debts. Bad debt also reduces the overall value of the debtor. So this will also be recorded on the debit side. Tell me, Alexander and Steve, is this clear to both of you?
Yes, sir.
Okay, so mainly these items are recorded in the sundry debtors, and after writing all these value, we will total all the asset side items. We will total, sorry, not asset side, we will total the debit side items, and from the total of the debit side, we will start reducing the items shown on the credit side, and after reducing these items, we will got the closing balance of the debtors account. So if there are any closing balance, it will be written here on the credit side by balance CD. Balance CD indicate it is a closing balance. Okay, now both the sides will tally. So here also, instead of writing opening, we write by balance BD. Balance BD indicate it is an opening balance. Balance CD indicate it is a closing balance. So this is how we prepare the sundry debtors account. I hope it is clear to you, Steve and Alexander.
Yes, sir.
All right, so let's do a question quickly based on debtors account. Just a minute. Yes. So we'll start our session with this question. So in this question, debtors in the beginning of the year is given 30,000. That means it is an opening, it is the opening balance of the debtors, right? And sales on credit is given 75,000. Cash received from debtors is 35,000. Return inward means purchase sales return 5,000. Then we have drawn a bill of rupees 25,000. That means debtors have accepted this bill of rupees 25,000. So eventually this will reduce the overall value of the debtor. Then we need to find out the balance, closing balance of the debtor, and bad debt information regarding the bad debt is also given. So first of all, let's quickly prepare the format of the debtors account and start putting these items on the relevant side of the debtors account, and then we will be able to find out the closing balance of the debtors. So I already have prepared the debtors account, so I will just remove these. Okay. So first of all, the first item that is given in this question is debtors in the beginning of the year, that is 30,000. So we will go to the sundry debtors account and we will write down to balance BD 30,000. This will be the opening balance of the debtors account. 30,000 is the opening balance of the debtors account. Tell me, Alexander and Steve, is this clear?
Yes, sir.
Yeah. Now, the second item in the question is sales on credit is 75,000. That means we have sold goods of 75,000 on credit. So this will eventually increases the value of the debtors of the business. So we will go to the debtors account, and on the debit side again, we will write down to credit sale 75,000. 75,000. This indicates that overall value of the debtors are increasing. Okay. Next item in the question is return inward, sorry, cash received from debtor 35,000. Okay, so cash received from debtor, so this will eventually reduce the value of the debtor. So we will go to the debtors account, and on the credit side, we will write down 35,000 by cash. After that, next item is return inward 5,000. That means purchase return is 5,000. So we'll go to the debtors account, and on the credit side again, we will write down sales return 5,000. Okay, next item is Bills receivable drawn during the year 25,000. So that means we have received a bill receivable of rupees 25,000. So again, on the credit side, we will write down bills receivable 25,000. Then after that, we have the information regarding the bad debt. Bad debts are 2,000. So bad debts 2,000. Bad debts are 2,000. So we will go to the sundry debtors account again and write down on the credit side bad debts 2,000. Okay. So items which are not given in the question, we won't be writing those items. Like for example, there is no information regarding the discount allowed, so we will skip that part. Bank, there is no information regarding check received from the customer, so we will skip that too. And there is no information regarding check being dishonored and bill being dishonored. Okay, so taking all these items into consideration, we can calculate the closing balance of the sundry debtors. Closing balance of the sundry debtors. Closing balance will be how much? So we will total the debtor side, debit side first of all, 30,000 plus 75,000 minus 35,000 minus 5,000 minus 25,000 and minus 2,000. The closing balance will be 38,000. Closing balance will be 38,000. Done. This is it. So Alexander and Steve, is this clear to both of you?
Yes, sir.
Any doubts? Anyone? Any doubts?
No doubt.
No doubt. Okay. So you are still writing it?
1 second.
So Steve, you are still writing it? Okay, take your time. I'm giving you 1 minute to note it down. Let me know when you are done.
Sir, I'm done.
Done, Steve? Steve is not responding. Okay. So I presume that you are also done. Okay. All right. Moving on to next question. All right, Alexander. So in this question, we need to calculate the total value of sales. All right. So let's read the entire question first of all. So it is written here that from the following information, calculate total sales made during the period. Debtors as on 1st April is given 20,400. That means this is the opening balance of the debtors. Then we have received a cash from our debtor is 60,800. Purchase return inward basically means purchase return 5,400. Bad debts are 2,400. Debtors at the end of the year is also given this time. Debtors are also given this time. So debtors as on 31st March is 31st March 2019 is 27,600 and cash sales are 56,800. So what do we need to calculate in this question? We need to calculate total value of the sales. Now let me tell you what do you mean by the total value of the sales? So whenever we need to calculate total sales, see, always remember that total sales include two things. First of all, cash sales, right? Cash sales plus credit sales. Cash and credit sales collectively known as total sales. So you can see here in the question, credit sales are already given. Sorry, not credit sales. So cash sales are already given. All right, but in order to find out the total value of the sale, we need to calculate the credit sales. And credit sales can only be calculated. It can be calculated calculated through debtors account, right? So in the for that purpose, in order to find out the credit sales, we will have to prepare the debtors account. Getting my point? You are getting my point, Alexander. Is this clear to you?
Yes, sir.
Okay, so see, you most have noticed that in the question this time we have the opening balance of the debtors are already given in the question. Opening balances are given. Closing balance of the debtors are also given in the question, and all other items are also given, but there is no information regarding the credit sale this time. So if opening balance and closing balance is given and all other items are also given, so if all other items are given, then obviously we can calculate this value of the credit sales, right? By putting all the values, we will find out the value of the credit sales as a balancing figure. Is that clear to you?
Yes, sir.
Okay. All right, so just do one thing, just prepare the debtors account and find out the credit sales. Prepare debtors account and find out the credit sales value.
Sir, can you show me the question?
Yeah, okay, just a minute.
Sir, what do we do with cash sale?
Cash sales will not be recorded in the debtors account.
Okay.
Cash sales will only be used to calculate the total value of the sales. So by preparing the debtors account, you will be able to calculate the total value of the credit sales, right? So once you calculated credit sale, you can simply add cash sales in the value of the credit sale, and by doing that, you will be able to calculate the total value of the sales. Is that clear,
Okay.
Alexander?
Yeah, okay, thank you. Sir, I got it.
Yeah, tell me.
1,32,600.
1,32,600. Just let me calculate. Are you sure you are getting 1 lakh something?
Yes, sir.
Okay, just tell me the opening balance.
20,400.
20,400, right? Okay. And cash sales, sorry, cash received,
Uh, 60,800.
correct. Then after that, after cash sales, we have sales return, right?
Yeah,
Sales return of 50,
400.
400. Then there are bad debts of 2,400, right?
Yeah,
And then there must be closing balance of 27,000, right?
yeah.
Anything else
27
on the credit side?
27,600.
27,600, okay. 27,600, just a minute. Okay, so total of the credit side is 96,200, and from 96,200 we have to reduce the opening balance. Is that what you have done also?
Yes, sir.
So if you will reduce 20,400 from 96,200, how can you get 1 lakh something?
Oh, sir, I added cash sales.
Yeah, so you must have added it. So you will have to reduce it 20,400. So after reducing 24,400, 20,400, you will get
7.
75,800.
Yeah, sir, I got that, and then I added cash sales like you said.
Okay, just a minute. 75,800, you have got that. Just a minute. So this is how your debtors account look like.
Yes, sir.
Okay. So after preparing the debtors account and finding out the credit sales as a balancing figure, this will be just a minute. This will be a balancing figure. Okay. Then we will find out total value of the sales. So in order to calculate total sales, we will apply this formula. Formula is pretty simple. Total sales equals to credit sales plus cash sales, right? So credit sale is 75,800 and cash sales are already given in the question. Cash sales are 56,800. So 56,800. So this is how we are going to record it. So sum total of it will be 1,32,600. So this is what you were telling now.
Yes, sir.
Okay, that is correct. Good. All right, so now let's move to the next question. In this question also, Alexander, we need to prepare the debtors account and need to find out the total value of the sales. Will you be able to solve this?
Okay, sir, I'll try.
Yeah, please try.
Sir, the cash, we have to add both of them and then record it.
Sorry.
We have to add both the cash received and then only record it.
Yes, we have to record cash from debtors.
Yeah.
That is what
So
you're
what?
asking, na?
Yeah. No. Will it be?
Cash received on maturity of bill receivable during the year, whether this item will be recorded in the debtors account or not. This is what you're asking.
Yeah.
Okay, so this will not be recorded in the debtors account, because
Okay.
see, the general entry for this transaction is what? When cash received on account of maturity, in the, I think when we were discussing about bills receivable, I have told you that when bill got honored on the date of maturity, general entry is cash account debit to bills receivable account, right?
Yes.
Okay, so do you think while passing the general entry, is there any and is there debtors account involved? While passing the general entry, there is no involvement of the debtors account. We simply write cash account debit to bills receivable account. There are no debtors account. So therefore, this particular transaction will not be recorded in the debtors account. Is that clear to you?
Yes, sir.
Yeah. Do it.
Sir, will bills receivable 31st March also be recorded?
Sorry.
Bills receivable on 31st March
Bills
2009.
receivable on 31st March will not be recorded in the debtors account.
Oh, so the first one is also not recorded?
Yes, yes, yes. First one will also not be recorded.
Sir, but in the format, we wrote bills receivable as well.
Yeah, sorry, what are you saying?
In the format, we have written bills receivable on the credit side.
On the credit side, we have, okay. So that is recorded when bill is drawn or accepted by the drawer or the drawee.
Oh,
So we are see, opening balance of the bills receivable and closing balance of the bills receivable will only be recorded in the bills receivable account. But
Okay.
when we draw the bills receivable, in that case, since our debtors are reducing now, therefore we write down the bills receivable on the credit side of the debtors account. See, when you pass the general entry of that too, it involves the debtors. Let's suppose Alexander is my debtor, you are my debtor, and you are issuing a bill of exchange to me. You are issuing a bills receivable to me. So the general entry will be bills receivable account debit to debtors account. This is what I'll be writing. Bills receivable account debit to Alexander account. So here the name of the debtor is mentioned. That means debtor account is coming into the journal entry. Therefore, we are recording the bills receivable on the credit side of the debtors account. You are getting my point?
Yes.
Yeah.
So credit sales 76,400.
76,400 you have got,
Yeah.
but I think it will be incorrect. Just let me check. Bills receivable. Okay, Alexander, see, in this question, we will have to prepare the bills receivable account as well.
Oh,
You know why? Because,
why?
see, just a minute. Let me show you. Okay, so when you will be preparing the debtors account, so there are no information regarding the discount allowed. There is no information regarding the payment received in the form of check. There is no information regarding the check being dishonored, right? Check being dishonored. But there is information regarding bills receivable getting dishonored. Getting my point? If bill receivable is getting dishonored, then there must be some bills receivable as well. Got my point?
Yes, sir.
So therefore, in order to determine what is the value of the bills receivable that we have received during this year, we will have to prepare a bills receivable account. So in this question, below the sundry debtors account, we will be preparing the bills receivable account as a working note. This is not the main part of the calculation. We will be preparing it as a working note only. So bills receivable account, bills receivable account. Okay. So opening balance of the bills receivable is already given. So we will write down to balance BD. To balance BD is given by balance CD is also given. Balance CD is given. Okay. Then there is information regarding bill getting dishonored. So by bills receivable dishonored, and here we will write down to debtors account. Okay. So opening balance is how much? Opening balance of the bills receivable are 7,800. So 7,800 7,800. Okay. Bill dishonored is how much? Bill got dishonored 1,800. 1,800 is the amount of bill get dishonored. 1,800. Okay. Then closing balance is also given in the question. Closing balance of the bills receivable are 6,000. So 6,000. 6,000. Alexander, is this clear now?
Yes, sir.
So now we will total the credit side first and find out the balance of the bills receivable during the year. So 1,800 plus 6,000 is how much? This is 7,800. Na? There must be some other information as well regarding this. Let me check. Yeah, okay. So third item is also relevant for the bills receivable account. Cash received on maturity of a bill receivable during the year is 20,900, right? So we will go to the bills receivable account and write down by we have received cash against bills receivable. So by cash 20,000, 20,900, 20,900. So the balancing figure will be transferred to the debtors account. It will be how much? It will be 20,900 only. Now you can find out the credit sales as a balancing figure of this debtors account. Credit sales as a balancing figure of the debtors account. Calculate and let me know. Alexander, you're getting this? Any doubts?
Sir, now bills receivable will be recorded.
No, we haven't recorded bills receivable from the information. Actually, we have calculated the bills receivable balancing figure. So I have transferred 20,900 from the bills receivable account. I have transferred this amount from bills receivable account to the debtors account, right?
Okay.
I'm
Yeah.
not transferring this value. If you think that I'm transferring this value, this is not the same value. This is the amount of cash that we have received against our bills receivable. By chance, both the items, both the values are same. By chance, this is same. This does not happen always. By chance, in this question, this is same. Got it?
Yes, sir.
So 70,000 plus 8,700 plus 20,900 plus 4,800 plus 2,500 and minus 30,800 and minus 1,800. So 74,300 should be your answer. 74,300 should be the credit sales. Done, Alexander? You are getting the same value?
1 second, sir.
Okay, after calculating total sales, you will have to calculate the total amount of sales. So total sales, as we know, total sales equals to credit sales plus credit sales plus cash sales. So credit sale we have just calculated 74,300, and cash sales are already given in the question. Cash sales are given 15,900.
So
15,900. Yes.
I think the balance is you wrote it wrong in the question. I mean, in your
Okay, just a
account.
minute. Let me check. So what is the balancing figure you are getting?
No, the end of the year balance was 25,500.
Okay. So end of the closing balance of the debtors account, na 25,000 it is.
Yeah.
Yeah. Okay. All right. I'll have to correct it too.
So I got 97,300.
97,300.
Yeah.
97,300. So I'm considering that you did the correct calculation. 97,300. So I'll have to correct here as well. 97,300. Adding both these values, we will get 97,300 plus 15,900. It will be 1,13,200. Tell me, Alexander, is this clear to you?
Yes, sir.
Okay. So this was all about the debtors account. Now, similarly, we have to prepare the creditors account. See, try to understand that debtors account, the purpose behind preparation of the debtors account is to find out the sales value, total sales value. So why do we want to find out the total sales value? Because in the upcoming question, we need to prepare the final accounts, right? So in the final account, you will have to write down on the credit side of the trading account. In the trading account, we need, what do we need? In the trading account, we need the total value of the sales, right? So unless and until you have the credit sales value, you won't be able to find out the total sales value, right? So credit sales value can only be determined through the debtors account. Sometimes credit sales are already also given in the question. In that case, it will be the question becomes easier for you, obviously. But when the value of the credit sales are not given, for that situation, we will have to prepare the debtors account. So the purpose, try to understand the purpose behind preparation of the debtor account. The purpose is to find out the total sales. How do we calculate total sales? We will have to add the credit sales and the cash sales. So unless and until we know how to prepare the debtors account, we won't be able to calculate the exact value of the credit sales. So credit debtors account is important so as to determine the total value of the sales. And why total sales are important? Because in the next sessions, upcoming sessions, we will have to prepare the trading account in the questions. And in order to prepare the trading account, we will require total sales. And only when total sales is given, then only you will be able to calculate the gross profit of the business, right? And once gross profit is determined, only then you will be able to find out the net profit or net loss generated by the business. So try to understand why we are concerned about the preparation of the debtors account. Because if debtors account is not prepared, we won't be able to find out the credit sales. If credit sales is missing, then we won't be able to calculate the total value of the sales. And if total sales, if we are unable to calculate total sales, we will be unable to calculate the gross profit, and eventually net profit or net loss will not be determined accurately. So therefore, we prepare the debtors account. So I hope everything that we've discussed in today's session about the debtors account is clear to you. In the next session, we will talk about the creditors account, and then we will talk about the preparation of the trading, or sorry, the final account. And based on the final account, we will talk about how to calculate profit or loss of the business, preparing their account based on single entry system. Tell me, Alexander, is everything clear to you? Do you want to ask anything?
Yes, everything is clear.
Everything is clear. All right, so this is it for today's session in accounts. We will take a break of 5 minutes, then we will continue with our economics part. All right.
Okay.
All right. Alexander, are you there?
Yes, sir.
Yes. Okay. So let's start with our economic section. In the last class, we were talking about the concept of cost, and I think in the last session we have discussed the average cost, right?
Yes, sir.
Yeah. So we have discussed all the different type of average cost: average
Yeah.
fixed, average total, and average variable costs.
Yeah.
All right. So you need to ask anything from those topics, or everything is clear?
Um, no, no, no problem.
No problem. Okay. So before starting anything in this chapter, so after discussing all of these things, we have one more topic left regarding wherein we will be discussing about the different uh, relationship between different type of cost. Primarily, there are three types of relationship in this chapter: relationship between the average variable cost and the marginal cost. Then we have relationship between average total cost and the marginal cost, and then we have relationship between average variable cost, average total cost, and the marginal cost, all three together. So let's start. First of all, before proceeding with the relationship, we will discuss few tabular type questions that can be asked in your examination. So just a minute. Okay, so I want you to note it down. Output, then we have fixed cost, variable cost, total cost, marginal cost, average variable cost, average total cost. And okay, this is average fixed cost and average total cost. So output are 0, 1, 2, 3, 4, 5, and 6. Then total cost is, let's suppose it is 50, missing at fixed cost and variable cost are missing. Marginal, average, AFC and ATC are also missing. Then at the first unit, variable cost is let's suppose it is 40, then 70, then it is 90, 800, and 160, and 260. So we need to find out all the values, all the missing values in this table. Please note it down and find out all the balancing or all the missing values. You have written it, na, Alexander? Question.